What if I told you that the crypto market is about to enter a phase that could create more millionaires than any other period in history, and 95% of people will miss it completely? What if I told you we only have 6 years until everything changes? What if I showed you the difference between watching others build generational wealth? Forget what you think you know about crypto investing. What worked in the past won't work in the future. And what's the single most important investment you can make in crypto? Watch till the end to find out. But isn't Bitcoin all you need? That's what most people think. Bitcoin is digital gold, right? But here's what most investors miss completely. While Bitcoin remains the cornerstone of any crypto portfolio, limiting yourself to just BTC is like buying only Apple stock in the entire tech sector. The real wealth creation happens when you strategically diversify. So what should you be looking at? The Layer 1 protocols that are building the new financial infrastructure. Ethereum, Solana, and a handful of other carefully selected projects that solve real problems. Think about the internet in 1998. Would you have wanted to own just one company or a basket of the future giants? Then allocate your portfolio according to the 40-40-20 rule: 40% Bitcoin, 40% established alternatives, 20% carefully researched emerging projects. But don't just buy randomly. There's a specific methodology I'll share in just a moment. But how do you time your investments in such a volatile market? Most people try to time the market and fail miserably. The secret isn't perfect timing, it's understanding the macro cycles that drive crypto. Raoul Pal points to 3 critical factors that almost nobody talks about. First, the Bitcoin halving cycle, happening roughly every 4 years when mining rewards get cut in half, creating natural supply shocks. Then, the global liquidity cycles, when central banks expand or contract money supply, directly impacting risk assets like crypto. So what does this mean for you? Don't try to time the market perfectly. Instead, set up a systematic buying strategy that aligns with these macro cycles. Dollar cost average weekly, but increase your buying during liquidity expansions and after halving events. But what's the next big trend that will create millionaires? The tokenization of real-world assets is about to explode. Imagine real estate, stocks, bonds, commodities, worth hundreds of trillions of dollars, all being tokenized and traded on blockchain. This isn't science fiction, it's already happening. Then how do you position yourself? Look for projects building the infrastructure for this massive shift. Protocols focused on identity verification, regulatory compliance, and seamless trading of tokenized assets. So, which specific projects should you watch? Focus on those with existing partnerships with traditional financial institutions, government approval, or significant enterprise backing. The winners in this space will grow exponentially as trillions in value migrate to blockchain. But what's the most powerful technological convergence we've ever seen? AI and crypto are colliding in ways most investors haven't even begun to understand. Think about it. Decentralized compute networks that power AI training, blockchain verification for AI-generated content, and autonomous AI agents that interact with smart contracts. So, how do you capitalize on this? Look for projects at the intersection of AI and blockchain, decentralized compute networks, AI verification protocols, and platforms enabling AI agents to interact with DeFi. Then start small but strategic. This sector is still nascent, but the growth potential is astronomical. Just 5% of your crypto portfolio directed here could outperform everything else combined. But what if you make all the right investment choices and still lose everything? That's exactly what happens to thousands of crypto investors every year. The hard truth is that security isn't optional in crypto, it's essential. Hardware wallets, multi-signature setups, and recovery plans aren't just for the paranoid, they're for the prudent. So what's the proper security setup? At minimum, a quality hardware wallet, encrypted backups of your recovery phrases stored in multiple locations, and regular security audits of your holdings. Then, consider the 3-2-1 Rule 3 copies of your critical information on 2 different types of storage media, with 1 copy stored off-site. This simple framework could save your entire portfolio. But aren't you leaving money on the table by just holding crypto? Most people buy crypto and let it sit idle, missing out on substantial passive income. Staking rewards have become sophisticated yield generators. By participating in network security or liquidity provision, you can earn anywhere from 3% to 15% annual yield on your holdings. So how do you maximize yield while minimizing risk? Focus on established protocols with proven security records. Consider liquid staking derivatives that allow you to maintain flexibility while earning yield. Then create a diversified staking portfolio, some in conservative, lower-yield options with minimal risk and some in carefully researched higher-yield opportunities. Just 10% annual yield can double your money in 7 years, without any price appreciation. But how do you know which projects will actually succeed long-term? Watch where the smart money is flowing. Institutions aren't just dipping their toes anymore, they're diving headfirst into specific crypto sectors. BlackRock, Fidelity, JP Morgan, they're all making strategic moves that signal where the industry is headed. So what are the telltale signs of institutional interest? Look for projects with regulated custody solutions, significant treasury investments from corporations, and integration into traditional finance services. Then follow the money trail, but don't just copy blindly. Understand why institutions are investing in certain areas and align your strategy with these long-term movements of capital. But what about the regulations that could change everything overnight? Most retail investors fear regulation, but the smart money sees it as the catalyst for the next massive bull run. Regulatory clarity will unlock trillions in institutional capital that's currently sitting on the sidelines. The projects that navigate this transition successfully will be the ultimate winners. So how do you position your portfolio? Focus on compliance-ready projects that are building with regulation in mind. Look for teams with backgrounds in traditional finance and regulatory experience. Then diversify across jurisdictions. Don't keep all your crypto exposure in projects based in a single country. Regulatory approaches vary widely, and geographical diversification provides protection. But how does the broader economic environment affect your crypto investments? Most crypto investors ignore macro conditions entirely, and it costs them dearly. Raoul Pal emphasizes that crypto doesn't exist in a vacuum. It's increasingly correlated with global liquidity conditions and risk sentiment. Understanding these relationships gives you an edge. So what should you watch closely? Focus on central bank policies, global debt cycles, and dollar strength indicators. These factors have proven to be leading indicators for crypto market moves. Then adjust your exposure accordingly. Increase positions during expansionary periods and reduce risk during contractionary phases. This counter-cyclical approach has historically outperformed buy and hold in crypto. But are you missing the financial revolution happening right under your nose? DeFi is rebuilding the entire financial system from the ground up, and most investors are overlooking its potential. Decentralized lending, borrowing, insurance, derivatives, these aren't just experiments anymore. They're becoming legitimate alternatives to traditional financial services, with billions in value already locked in these protocols. So how do you navigate this complex ecosystem? Start with established blue-chip DeFi protocols with proven track records and security audits. Learn one new DeFi strategy each month to gradually build your knowledge. Then think beyond speculation. DeFi isn't just about trading, it's about building a comprehensive financial strategy that leverages the unique capabilities of blockchain-based finance. But how do you cut through the hype to find projects with staying power? In a sea of promises, actual utility is the North Star that guides successful crypto investing. The projects solving real problems, reducing costs, increasing efficiency, enabling new possibilities, are the ones that will survive and thrive over the long term. So, what defines real utility? Look for projects with active development, growing user bases, and clear problem-solving applications. Avoid anything relying purely on tokenomics or marketing hype. Then evaluate projects through the lens of the problem they solve. If you can't clearly articulate the real-world issue a project addresses, it's probably not worth your investment. But what's the single most important investment you can make in crypto? It's not in any token or project, it's in your own education. The crypto landscape evolves at breakneck speed. Yesterday's winners can quickly become tomorrow's cautionary tales. The only sustainable edge is continuous learning. So how do you build knowledge efficiently? Create a systematic learning plan. Spend at least 30 minutes daily on research. Follow the thought leaders shaping the industry. Not just the loudest voices, but those with proven track records. Then put knowledge into practice with small positions. There's no better teacher than direct experience in the market. Start small, learn from mistakes, and scale what works. The next 6 years will completely reshape the financial landscape. The crypto market is maturing from its Wild West phase into something much more significant. A new financial operating system for the world. Will you be positioned to benefit from this once-in-a-generation wealth transfer? Or will you be watching from the sidelines? The 12 moves we've discussed today aren't just suggestions. They're the essential playbook for what's coming. Remember, the biggest gains often come right before mass adoption. We're entering that critical window now. The foundations you build today could determine your financial future for decades to come. If you found this valuable, hit that subscribe button and notification bell. Until next time, invest wisely and stay ahead of the curve.